Hi, it's John Kelly. In this module, we are going to discuss the Enhanced Audit Report and the Audit of Disclosures changes to standards, and discuss whether or not these can be adopted early or anticipated early. And as always, we want to be efficient and effective, follow professional standards, and document what we have done properly. Now, there are two broad categories of changes. There's changes from the new reporting standards, and there's changes from the Audit of Disclosure project, which are kind of sprinkled through standards. Now, of course, if you adopt the new reports, you must change their performance and the checklists. But the question is, if you don't adopt the new report until local standards require it, and internationally this is required December 2016, but different jurisdictions are adopting at different times, then the question is, can you anticipate the performance changes that flow from the two things noted above? Now, the enhanced report is very different whether there are key audit matters or not. Certainly, it's going to be much more complicated if you're recording a key audit matter. And a multitude of reports, virtually every audit report will be affected and in the new format. So a lot of changes to the report. Most of the discussion around the world that I have seen has been in the context of listed companies with several key audit matters. But the new enhanced report will apply to all audits, and it'll apply to private companies and not-for-profits where key audit matters are not required, but I suppose you could do them if you felt like it. Now, a change matrix. If we have a new form of report, changes to reports, of course, everything. Lots of changes to the report and lots of reports. Changes to checklists and performance, maybe, and changes to the engagement and rep letter. Yes, not so much if there's no key audit matters, but yes. And if you're disclosing key audit matters, changes to the reports, well, that of course depends on the nature of the key audit matter, maybe changes to the checklists. And if you're disclosing key audit matters, the engagement and rep letter and your communication with the client generally is going to be more complex, and it's not checklist driven, it's driven by the nature of the key audit matters and the communication. Audit disclosure, there's no change to the report, but perhaps, depending on how you did it before, you'll need to change checklists and performance, and perhaps you'll need to change the engagement and rep letter. And just to comment, there's much more communication being required with those charged with governance, much more for listed, more for private and NPOs, though a lot of the communication surrounds, or the requirements for communication surrounds communicating about the form of the audit report, and providing a draft audit report and draft financial statements will solve all of that for a private company or an NPO. And I think that's probably pretty much automatic now anyway. And as I said, the communication is not going to be checklist driven, it'll be driven by the circumstances. Now, if you're in a place in the world where you're not required to adopt yet, can we anticipate these changes? Are the old and the new standards basically consistent, or do the new standards sort of provide a consistent improvement on the old standards? And so maybe we can change all our checklists, change our performance if it needs to be changed hardly at all anyway, and get on with the new standards even though we don't adopt the report. So the enhanced report, significant with or without key audit matters, very significant changes there. It's going to be more work. But performance changes and early anticipate or adopt, I'm going to talk about in detail more. Disclosure, no report changes, but it depends if you always audited disclosure. And can it hurt to change your forms to say, I looked for risk and material statement in the financial statements and in disclosures, for instance. Now, many of the changes are editorial or trivial, or they relate only to the form of the new report, so they don't really matter much. And those changes won't affect performance or the checklist. So performance and form changes from the sections that affect the report, 700, 701, 705, 706, 720. Obviously, the report changes under the new sections everywhere, and for key audit matters if there are key audit matters. But does the report change for, or does performance or checklist change for the new report? And other than we're going to need a new checklist for looking at the annual report, no. Will we need to change the engagement letter? Well, we'll come to section 210 in a while and talk about that. The rep letter, is it any different? Not particularly. Again, for the annual report, the engagement and rep letter will need to change, so the client tells you whether they're going to issue an annual report and tells you whether or not they've done it right or not. Key audit matters, well, we're going to have to tailor a lot of things. So can we adopt or anticipate the form and performance changes without adopting the new report? Now, what are the changes? Section 720 on the annual report. Well, management is to tell us what's in the report and give it to us, and that's not a bad thing to have in the engagement letter. And even if we don't adopt the new section, should we do that now? And the answer is probably yes, because that could be something that would give us grief if they hadn't done that. The rep letter, that management should tell us that they have given us the correct information. Surely we should have that in the rep letter as well. And then there's a list of procedures to do and a suggestion that we should keep a copy of the annual report. The procedures are not inconsistent with what we're required to do now, and keeping a copy of what we looked at, not a bad idea. I'm assuming you would do that now. So all of those things can be either adopted or anticipated early, and they really don't change much. Going concern. We're required to get sufficient appropriate audit evidence. And can we change our checklist right now? Well, we're required to get sufficient appropriate audit evidence about anything. So if we want to emphasize sufficient and appropriate with respect to our evaluation of the going concern assumption, can't hurt. There are a number of subtle but consistent with the current standard wording changes. They're not inconsistent. They can be adopted now. The new wording and the old wording, pretty much the same. So nothing changes much there. The engagement letter, you should mention the form of the report, key audit matter, emphasis of matter, other matter, modification. That's not inconsistent with what's being done now, and if you word it generally, we may have to modify our audit report to include another matter paragraph or something like that. That would be consistent with the old and new standards, so you can do it now. The example letter includes a whole list of disclaimers. We may not find error, we may not find fraud. All of those are in GAS now. They're in standards now. They're just not in the report and not in our engagement letter. Can it hurt to include those disclaimers in our engagement letter before we adopt the new report? I don't see what problem there would be in that. It's all consistent with the current standards, so why not do it now? So adopting the new letter now, also the advantage is that the client will have agreed in the engagement letter to the new form before we issue the new report. And it's kind of, if there's changes, it would be cool that we got the engagement letter before we dated the report. Quality control, required to consider key audit matters, emphasis of matter, other matters in the annual quality control process. Not a bad idea to emphasize that now. Include a question saying, is the form of the audit report appropriate in the circumstances, and implicit that the various modifications are properly included. So not a problem doing that now. Fraud. The discussion about fraud is to include fraud due to disclosure. And there's a couple of sections, either fraud due to disclosure or fraud due to obscure disclosure. Nothing wrong with including that now and anticipating that change, and to remind people when they're having discussions, planning discussions, that they should consider all of those things and document that you've done it. So not a bad idea, consistent with the current standard, not really a change. Other possible changes: documentation. Maybe document that the opinion modification is appropriate. Probably you were doing that now. Emphasis on disclosure and merging the assertions. Depends on what you were doing before. Don't know that actually that will cause any changes to checklists or performance. Materiality includes some examples on how disclosure can cause material misstatement. So if you always thought that material misstatement and materiality had to apply to disclosure as well, that doesn't represent a change. The response to risk of material misstatement, again, an emphasis on disclosure. That again depends on your prior approach, and I suspect not much of a change to performance or checklists. $260, no changes but greater emphasis on communication. And why wouldn't you adopt that, and why wouldn't you tell the client more? So not a bad thing to do. Illegal acts. The illegal acts section has been amended for jurisdictions where you are required or not required to report the illegal matter to somebody else and the documentation of it. Little form effect, and the number of times the auditor finds an illegal act on their own is very, very rare, so not much of an impact. So I think form changes, performance changes, not that significant anyway. And with care, you can update checklists to the new standard and in fact improve what you say you've done, whether or not the new report is adopted. So you can anticipate changes without adopting them or without adopting the new report. Would you like to issue the new enhanced report before you absolutely have to? Well, it includes a disclaimer that audits may not find error or fraud twice, so that can't be bad for the auditor. It includes a disclaimer that we are less likely to find fraud than error, also not bad. It includes a triple disclaimer that we're not responsible for the annual report, and includes key audit matter warnings if key audit matters are included. In other words, it says if a key audit matter it's really difficult to determine the valuation of goodwill, you've provided a warning that goodwill may not be properly valued. You've told the reader what you've done about it, and if it turns out in the end that goodwill was in fact improperly valued, well, you warned and you told, and it would be very difficult then to understand how a user could complain that they were never told that goodwill might be improperly valued. So those are all advantages of the new report. Disadvantages of the new report tend to be administrative. It's going to be much harder, much more a larger number of words, particularly in the first year. Every audit report you issue is going to change, particularly if you have key audit matters, if you're dealing with a listed company. Will the client be surprised? Will they resist the changes and the disclaimers? So get a draft to the client now. Say this is what your report's going to look like in a year or two, depending on when you have to adopt, The other thing, Canada last time produced a very extensive book of guidance on report formats, all kinds of examples of modified, changed, emphasis of matter, other matter, paragraphs. I'm kind of hoping that they're going to do that now. Canada doesn't have to adopt until December 2018. So maybe if you don't have to adopt yet and you don't want to do all the work necessary, wait until Canada comes up with that report if they do. So those are the circumstances, up and downside, of adopting the new report. So thanks for listening.